Marilyn, currency dynamics and fixed income really affect the coupon right now. To begin with euro in this London hour, what do you do on currency as you try to find coupon in Europe?
Yeah, that's right. So if you're a European investor, Euro-domiciled investor, then it's really important to be aware of the hedging costs. And I think if you're looking for coupons, then we do see, potential RV opportunities in Euro credit. We see opportunities also, elsewhere in Asia, and also in dollar-denominated assets as well. But it's really important to be aware of the carry you get, but then also the hedging cost back, because it's about 3%, which is a lot. So I think it's very, very important to be very aware of when you're looking at that coupon, what the end investor actually gets back after the hedging costs.
Edmund, maybe you don't have the hedging costs in equities, but you certainly have the currency translation as well. What does strong dollar do to U.S. multinationals, or is it too small a part to play?
Well, you can't say it's too small, Tom, because if you look at the S&P 500 index, something like 40% of earnings are from overseas. So clearly it has an impact. Maybe not as much an impact as currency does in Asia or in the US, but an impact nonetheless. Of course, I think the real issue for equities is not going to be just the currency by itself. It's going to be much more where the currency goes. And I think it's going to be much more about really the debt mountain that the US has to deal with in the coming years. And what does that do to the currency? I think that's more of an issue in terms of stability going forward.
So what does that do to the currency?
Well, I think it makes the currency go down. I think Tom's pointed out the fact that the dollar's way high. OK, fine. And everyone's been very bullish the dollar. Well, we're not. We're pretty bearish the dollar because we think eventually the debt mountain comes to bear. Someone's got to buy this US debt. Remember, they're running massive budget deficits. I love the way everyone complains about Italy in the Italian budget deficit. The US have got a massive budget deficit. It's only going to get worse. Trump is not doing anything to help that. And they think that everyone's going to buy their debt.
To be fair.
Yeah, but the thing is, they still need people to buy their debt, Francine. Someone has to buy it. Yeah, the Treasury sellers. Who's the buyer? Not the Russians, not the Chinese. Oh, good luck. The domestic US investor? Let's see. Let's see if they absorb all of the debt.
OK, Marilyn, where do you see dollar going from here?
Yeah, so over the medium term, we also see the dollar depreciating from here. As I say, it's been very strong at the moment. We did see a bit of a pause after the Fed, particularly Jay Powell, was suggesting that they might be on, pausing for extended periods of time. And I think as we go forward, the US is in the late cycle of the business cycle as well. So our view is also that over the medium term, at least, the dollar will also depreciate.
OK, what happens if we have a trade truce? Does it mean, Ed, that actually the Fed is back at hiking?
No. Far too early to say. I think the Fed will leave it a few months. Look, they're not in a big rush. Core inflation is not going up that quickly despite the rise in wage inflation. And they're also, of course, in the US, don't forget, helped by the oil price. The oil price has a lagged effect to inflation. It was coming down, remember, in December, quite considerably. And the feed-through, therefore, to core inflation is going to be somewhat negative rather than positive, at least for the next few months. So they have a little window where they can sit and do not very much in particular.
Marilyn, where is BlackRock on the concept of lower for longer? We had Gary Shilling on yesterday, arguably the best two-decade call on lower interest rates, et cetera. But where is BlackRock's formal statement on how low and how long we stay with this rate regime?
Yeah, so I also think that they're going to stay, lower for a lot longer. And, our core view at the moment is that we'll have a pause, at least for the first half of this year. As Edmund said, I agree with his statement that the Fed is going to be very patient. They're in no rush to do anything. And then when you see the development of inflation, when you see the development of global factors, global trade, when you see the development of the US economy and activity, then I think potentially in the second half of the year, you could see a further hike or you could see a continued pause. But I certainly think in the US, and if you look globally as well, if you look at the ECB, they're in no rush to do anything either. The Bank of England, wants to shore up the economy, and we think that, on the margin at some point they will raise rates. But I think, broadly, when you look at the global economy, when you look at developed markets, we are in a completely different regime to the past, and we are going to see rates much lower for longer. And the end point is also going to be much, much lower.